Hey traders, happy Monday. Welcome to the weekly outlook. It is the 28th of October and the week of October 28th through November 1st. So will we have a trick or treat week with a ton of news to wrap up the month? We have a parliament vote that popped up on the calendar today. We have the FOMC with the Fed possibly cutting rates. CME Group says about a 90+% chance of cutting rates on Wednesday. We'll take a look at the calendar here in just a minute, as well as the charts. So lots going on, lots of volatility expected, which should be a good thing for us traders to see some opportunity and some movement. So let's go ahead and begin. I'll get into the charts here in just a minute. That's how you can follow me out there in the social media world. Instagram @pulver.chris, Twitter @pulverchris, Facebook, my name, YouTube, my name as well. Send me an email if you wish. I appreciate the likes, subscriptions, followers, stuff like that. Lots of good comments, lots of good feedback coming the last several months. I'll keep these videos and other content coming. So without further ado, let's jump into the charts. This is the SPY or the SPY, and Wall Street is officially open. Let's take a look. I was looking at this. We gapped higher. In fact, Wall Street just opened today, about 20 some minutes ago as I'm doing the video. We have gapped higher to a new historical high. Not surprised at all to see that. This is a structure we talked about playing out. This larger broadening formation / megaphone pattern is playing out high to low. Let me change the color there, make this a little bit easier to see. So we have our high to low, high to low. This is forming another rising wedge, but it still gives room for there to be a rally to finish up towards possibly 310, 315 on the SPY before we come into possibly another correction. Maybe over the next couple of months, maybe a year-end correction, maybe not. Maybe this is just a low participation rally for the rest of the year. On things that we have noted over the last several months, that would be central bank support. We have US and China trade talks, if I can type, trade talks, and this is some market optimism coming from that. You would think the top two economies in the world can figure something out. Brexit. There was a vote over the weekend that the European Union is accepting an extension for Brexit until January. So extension, January 2020 for now. So initially we had the deadline October 31st, which was this week. If this was the case, we would see probably a lot more volatility. I do see that there is a Parliament Brexit vote on the calendar for today. It is tentative. I'll be watching the pound pairs this week, but EU has accepted a Brexit extension until January of 2020. I'm interested to see how that affects the pound crosses, simply because the last week the pound pairs have all but went to sleep. We had so much action in August, September with transitions, and October as we were nearing. We had about 5 or 6 days of just ridiculous movement where we've had more volatility and more straightforward movement than we've had literally all year, and then it just stopped. We had 4 or 5 days, and then everything stopped in the pound pairs, and you'll see that in the indecision as I go into the charts here momentarily. But right now, I think for the U.S. markets, earnings have been a big catalyst for this as well. So we have heavy earnings season. So your big companies. Let's go ahead and find out who's on deck this week. We have Beyond Meat coming out with another earnings report after their crazy IPO back a few months ago. It went from opened up around $60, ran all the way to 200 plus, and now it's back to $100. Bitcoin's had an exciting weekend as well. Take a look at that. Alphabet from Google, Walgreens, Pfizer, MasterCard, Apple, Facebook, Starbucks, Airbus. So we got some pretty major earnings this week. And let's go into, let me go ahead and delete my notes there. So that's what's keeping this rally afloat. Also, I noted that this morning we saw some comments from Trump. And here you go. Really, it was just a simple comment. I was looking for that S&P opens at new all-time record highs. Trump takes victory lap. So I just saw a comment that said, I expect good things in the market this week. That was a comment from Trump, and there we go. There's actually from the man himself. S&P just hit all-time high. This is a big win for jobs, 401ks, and frankly, everyone. Okay. That's what we say, right? That's what we're seeing. This is a big win, not to mention that nobody seems to acknowledge the 19% correction from last year. And from this high to where we are currently sitting, we're only up 5 or 6% from that high. Now, granted, I understand that the long-term play is to see stocks go higher. This sign, I think any trader can see what's written on the wall. This will end badly. And whether it's under Trump's hand as a reelect or not, it's going to end badly, and it's going to be nasty, and the reversion to the mean is like 30 to 40%. So keep the party going. By all means, let's enjoy it. Let's participate in this. Let's keep making some pips. Let's keep making some dollars. Let's keep enjoying those trades, but protect those profits. So we will see if this is just, the real confirmation, or of course this leaves us with a gap. So the market does make it pretty interesting to fill those gaps. We had a gap right there. We were having a gap from today. So if this rallies a little bit for the week, that would not be too surprising. The Fed can, of course, keep that going as well. And again, it's going to be an interesting week. And this entire development, this whole structure for the entire year has been something to watch. Clearly, the market is just reluctant to give back any types of gains, and that is fine. But like I said, traders know what's on the table here. This is a bull trap. This might be a great last-ditch effort. But someone or something or some major event is going to be the driving force for why it all crumbles. But I'm not calling the top, and I'm not interested in doing that. If this wants to keep going with the artificial mechanisms that are in place right now, by all means, let's see it. So what I'd like to see out of the currency market, the stock market looks poised to continue this rally. We should see some Japanese yen weakness. We should see some Swiss franc weakness. We should see Aussie and New Zealand strength. Taking a look at the chart this morning to kick things off, I will be watching the pound all week. This is not, right now you're showing that pound is the strongest, Swiss is the weakest, but looking left on the actual meter on this y-axis, negative 25 to 30 is not really a lot of movement. When we see a lot of movement, anything, above 40 to 50, below 40 to 50, that's a good sign for some decent movement on the day. We have seen the pound pairs over the last several weeks get up as high as 180 to 200. With some of those huge rallies coming in middle of October. So certainly with this week, lots of news on the calendar. In fact, this is what the calendar looks like. Parliament Brexit vote tentative for today. We will see what's going on. UK Parliament will vote on whether to hold a snap general election. This actually popped up on the calendar last week as well, and it was not initially on the calendar when I did the weekly outlook on Monday. Popped up on Tuesday for this tentative Parliament Brexit vote, a pass, and then 16 minutes later, Parliament Brexit vote, reject. So you go into this week, keep watching this. Keep watching those pound pairs. What else do we have? Aussie kicks things off. RBA Governor Lowe speaking, CPI news and trim mean CPI out of the Aussie on Tuesday night. That's going to be Wednesday's trading day. Wednesday is a massive day. It's not quite Halloween, but ADP job numbers, advanced GDP for the U.S., CAD rate decision with a press conference, Fed rate decision with a press conference, and notice that this changed from last week. There is an expected rate cut now from the Fed. Last week it said 2.00. Now you can see that the analysts are expecting that to be a cut. That would signal 3 cuts for the year. If we go into possibly December for a 4th cut, the Fed is playing ball. Again, that's why I think the market will continue to rally. The BOC, on the other hand, 1.75, looking to stay the same and remain the same at 1.75. There is some pressure on the dollar CAD to possibly breach 1.30. Keep an eye on that currency pair this week. I actually have some small buy trades going for early in the week, and we'll see what happens with the shakeout on Wednesday, because that's a double dose of central banks. Wednesday at 10 a.m. is the BOC, and 2 p.m. is the FOMC. So Canada and U.S. banks, respectively, on Wednesday. Also carrying over from Wednesday to Thursday, New Zealand news coming out at 8 p.m., Aussie news, China news, Japanese yen. We have a Bank of Japan outlook report. That's going to be anywhere from 11 p.m. to 1 a.m. Bank of Japan most likely will remain accommodative and still go after their 2% inflation target, whether they say a lot or not. I should see Japanese yen weakness if the stock market continues to rally. CAD on Thursday, GDP numbers there, personal spending for the U.S., more China news. Friday, all day, French and Italian bank holiday. Curious what that is, All Saints Day. And do not forget, Friday, non-farm payroll, 8:30 a.m. It's just the U.S., it's not the CAD, so non-farm going to be a big number there. Look at the forecast. That's one of the lowest forecasts we have seen in a while. Wow, I can't remember the last time we had a less than 100K forecast. Now, I've seen actuals come in less than, but yeah, 90K forecast is pretty low. Unemployment rate, you can see that they're forecasting a 0.1% higher than previous. So, interesting little jobs report on Friday. Again, this is pointing towards some dollar weakness. If they're expecting a weaker jobs number with a slightly higher unemployment rate, we'll of course see what average earnings comes in at. Last month was a miss. I mean, a terrible miss, 0.3%. But with a rate cut and a weaker than expected jobs report, again, we'll see what happens, because they can forecast 90 and come in at 150. and all of a sudden it's like, oh, look at this great jobs report. So, take the news with a grain of salt, but it's going to be a big news week. This is one of the busier calendars we've seen in a while. So on that note, lots of movement expected. I'm excited for this week. You should be as well. Gapping higher is a good thing. Let's see if we can sustain that close on the day. Let's get into those currency pairs. Let's start off with dollar basket. So we have broken this channel that goes back to January of this year. We have literally been in a trend, now a minor trend, so lows, higher lows, higher lows, higher lows all year. Now we did recently break that channel. So I am curious, and this is what I said last week, the bears need to protect this area. So I think that the bears need to show some signs of resistance right in here. It was previous resistance back in August and July. I think it needs to hold for the dollar to get weaker. We need to see this high to low hold and then push lower. Now this could also be very choppy, and this could be a long left shoulder, carves out a head, goes down, carves out a long right shoulder, and then eventually does end up falling. So we might have some consolidation, but I would think with October coming to an end, November getting into holiday season, I would like to see some trends. So if this area can maintain resistance, I think the dollar weakness with the Fed playing ball, possibly some weaker numbers coming out of the U.S., and just a market rallying and optimism out of U.S. and China should weaken the U.S. dollar and give way to some more risk appetite currency pairs like the Aussie and the New Zealand. So watch this area really carefully here. Resistance should be around 12,350. Anything that pushes this back down or rejects off that level is good to look for some opportunities to short. I have some nice technical patterns on that as well, expecting some further dollar weakness. So let's talk about that in a moment. Here we go to U.S. oil. Oil's had a nice steady recovery towards 56 and change. Still, huge levels of resistance and support. $61 resistance, $51 support. Just monitoring this very closely. Sell high, buy low. Everybody seems to be operating quite nicely here within this range for now. Bitcoin had a pretty exciting week and weekend. Look at that rally. That's crazy. Now, I did see some oversold conditions right there, and I noted this pocket around 92 to 9,300 and a huge spike to the upside. Now, I don't really know where this came from. Zuckerberg was on Capitol Hill last week talking in front of Congress about Libra and said that he wouldn't go through with Libra without U.S. regulatory approval, and that's a big question mark. So where this rally came from exactly, I don't know. It doesn't really matter because I'm still holding long from like 3,500 and 4,000. But this is a promising sign to have some hopeful momentum continue, and maybe we can revisit these highs around 13.7. So let's see what happens over the next 24 hours in Bitcoin and for that matter, any major cryptocurrency. But that's a big structural break. That pocket was noted, and however, it did do it in a pretty inefficient manner. So, this giant drop here ended up getting filled, but you notice that we have in the short term 77.60 to 8,200. I could see this price dropping off of this area. That level's already kind of filled. This area would not surprise me if it does fall back down and balance out, and then it's just maybe it's a fake out. Maybe there's some quick squeezes. But from the higher time frame, that technical close on the daily chart does make this correction look a lot more promising to the upside. I think if we hold this area or even hold these lows on the right side of the channel, we should see some bullishness continue out of the cryptos, at least for Bitcoin, and the others will follow. All right, gold and silver. Silver, I know, had a decent charge last week. We got on the right-hand side of this corrective channel, but needs to stay above, this channel needs to make sure that we hold these levels and continue to look. There's still $20 and change as a viable level for silver. Gold, sitting on the channel right now. This looks still channel bound. I don't think that gold is going to break out anytime soon. This is probably still channel bound to push back down. We will see. I wouldn't really get all excited about gold until it's up above 1530 again. If we get above 1530, and even that needs some positive closure, because 1540 to 1550 could be a double top, and this could still head back lower. So silver is a little bit more convincing, but I have a feeling that both gold and silver will head in the same direction. All right, let's get into some currency pairs here. Aussie CAD. Aussie CAD coming back down to some lows. I'm still on the right-hand side of this trend line, buying at 9,000. I've got another pending order at 8,880. Looking to get back towards this green profit area and outer trend line around 9,250 to 9,300. Aussie Swiss is moving nicely this week to the upside. Hopefully we see some new highs, and let's start taking out 69.50 and 7,000. That's where I'm looking to take some profit on Aussie Swiss. Aussie Yen, We are looking for some weakness in the Japanese yen. I would like to see this stochastic finish its move. Maybe this is going to run for Monday, Tuesday. Look for Wednesday to be in this area, possibly a buy zone opportunity. It might be nothing more than a pause. It might be a pause cycle, but we should be pushing higher. Hopefully we see higher highs out of the JPYs this week. So I would be favoring Aussie yen to the upside, CAD yen to the upside, Euro yen, New Zealand yen, pound yen if you want to play the pound, dollar yen. We should be seeing some yen weakness this week. Aussie, New Zealand. The New Zealand's been on the losing end of the strength meter for the last several days. However, I have some really good harmonics on the larger New Zealand charts. Aussie New Zealand is looking for a weaker, well, I should say a bearish move on the Aussie New Zealand according to a weekly pattern. New Zealand CAD is looking for a bullish pattern. New Zealand yen, New Zealand dollar looking for bullish patterns on the New Zealand. So we should see some New Zealand strength. Again, maybe it's coming out of US and China this week. If we do see a double top right here around 108.25, that's probably a good opportunity to short with a stop loss fairly tight and then try to go back down into previous lows, equal lows. This is all corrective territory. You know, if you get, I don't know, if you get 100 plus pips out of this correction, move your stop to plus 50 and let it trail. See if it wants to go lower. We should see some levels back into around 106 or 105, possibly even this pocket around 104. And from there, that'd be great because a seller can have a low risk, nice win to the downside, and buyers can start accumulating low positions to take it back up towards 109 or 110. So I'm going to continue to watch this Aussie New Zealand. I don't have any positions going right now. I wish I still did, but I've closed out on this and closed out over here at 107 to 107.70. I will be looking for that double top opportunity around 108 and see if this does head back lower. From there, I'm just going to wait to buy it. I will buy it much, much lower. Aussie dollar. Here's a reversal pattern I was talking about on the dollar index. Possibly a head and shoulders. A bullish head and shoulders would look something to this effect. So right here, left shoulder, head to neckline. If this is a right shoulder, I'm looking for these blue levels that I have noted. I have a pending order, pending order, pending order. I'm looking to see if I can get involved with one of these bouncing points. If this becomes a right shoulder, I want to see that right shoulder push up to a new high. I want to see it break this channel for the first time in a year. You know, this is the high back in December of 2018. If we can break this, I mean, this would be the first time as a channel break from flash crash lows to these lows, all this support. If we can break that, we should be heading up towards, I mean, I would like to think we can head all the way back up towards this high around 7,300 to 7,350. I will certainly take profit along the way if we get into, say, 72. That's a nice spot as well. I've got pockets, I've got levels that I'm looking to make sure I'm protecting. If it hits and keeps going, I'll try to trail it. But I will not be giving back profit if I'm in building positions here and we're going up towards 72. I'll be protecting profit all the way. But this does look like a promising reversal pattern. It's either going to be bounce off this blue level or we may come back in for some type of double bottom or slightly divergent bottom and then we head higher. But I do see medium term Aussie dollar heading north. CAD Swiss. This one, I'm looking for some indecision. We're at 76.28. We've had 1, 2, 3, 4, 5, 6 daily candles in a row. It wouldn't surprise me to see some short-term CAD weakness for this particular chart and with others. 6 daily candles in a row is quite a bit, and I want to see if it holds. I'm not interested in selling it right now unless I see indecision, then possibly a sell opportunity. But for the most part, I'm just waiting to see what happens. This is firm resistance, firm resistance, firm resistance. Didn't really act as it yet. So we need to see some type of indecision or a bearish candlestick formation for this to push back down into, say, 7,500 or 7,450. A bigger move would be there. But would that be oil driving it? Would that be the BOC? Would that be CAD News? I don't know yet. I don't know yet. And maybe nothing happens. Maybe this is, time for the Swiss to get really weak and this just continues to run. And I'll feel like I'm missing out because this is going to 8,000. But I want to buy this thing lower. I still want to look for opportunities to buy this at 75 or 7,400, down here at 73 or lower, and then hold it to 8. So I'll be making an assessment. But 6 candles in a row is something to note. If we go 7, 8, 9 perhaps, by this week, if we see something that's just continuing to be bullish, there will definitely be an indecision or a correction coming on the CAD Swiss. But if you're in and you're long on CAD Swiss, certainly a good spot to take some profit above 7,600. CAD Yen continues to carve out new highs, which is good. So from this turning point around 80.50 all the way up towards 83.50, keep running. We're heading up towards previous highs. We're heading up towards this 618 extension at 84.25. Looking left on the chart, yearly pivot way up here, 84.07, which was hit early on in the year. And certainly that could be another benchmark to get us back to these previous highs. This goes back to flash crash in January, recovery in February, March, and that's possibly another target again. So if you think about this, how amazing is to see the market December of last year to a flash crash, runs all the way up here to establish a high for the year, slowly comes all the way back down, very close to that flash crash, only to reverse and go all the way back up. This is why they say the market's a zero-sum game. If you look at this exchange rate from high to low, from low to high, it just goes exactly where it started. So it's pretty amazing stuff. But yes, there's tons of opportunity. That's why we insist on buying low and selling high. Because if you're buying low, you give your profits chances to run. If you sell high, you give your profit chances to run. It does get noisy inside here. It does get messy inside here when there's all this consolidation. But we have to have a plan. So anyway, right now, it looks like we're going to continue to the upside towards 84.50 to 8,500 on the CAD yen. Stay with those alignments if you see bullishness, and any systems that are bullish look pretty solid. Swiss yen. I do have a pending sell here at 110.35. I'll make an assessment on this one. I might not want to keep that trade. I might be looking at something. Well, we had an equal low right there. It really is which is going to be weaker, the Swiss or the yen. And sometimes it's so hard to get either one of them to be stronger or weaker than the other that this might be a trade that I cancel. I'll make a decision on that tomorrow during my trading room. So, but most likely I'm leaning on it right now. It's probably going to be a cancel trade and not worry about it. Euro Aussie. Hopefully we will see some Aussie strength this week. And if so, I would love to see this pushing lower into levels that we're talking about is a break of this area pushing down towards 1.60. That is target one. I'm currently short at 62.95, trying to get a few hundred pips to the downside. Target one is 6,000. From there, that is the neckline, and we are looking for bigger pushes to the downside. So target one is 6,000. Target two would be the measured move of this high to low, lower high to lower low, which puts us around 5,500. That is symmetry. Now, the true head and shoulders is going to be a measurement like this. Head to neckline, if this is your right shoulder to neckline, this measurement right here should be matched at the break of the neckline. So we should be seeing something much lower than that, around like 5,300. But I'll take it in, I'll take it in waves. If this is wave 1, 2, 3, I'll take some profit. If we have a pullback here and a wave 5, we'll take some profit. But if we get some bearishness towards 6,000, this should be good to go for the downside. Neckline is right there, right around 6,000. So that's step one, is we're trying to trade a little bit early, get this trade to the neckline, take some profit, and then if we break the neckline, try to hang on to it, partial profits, and continue to enter, deploy some systems, get bearish on this thing, and let's make a few hundred pips to the downside. That is Euro Aussie. Euro CAD, as the CAD Swiss is headed to the upside, the Euro CAD has come back down. I now have a couple positions that have been filled. 4495 and 4618 respectively have been filled. 1, 2, 3, 4, 5 daily candles in a row. As a kind of near term to medium term, I am expecting some CAD weakness off this low, off this low. I'm also looking for some divergence, which we can see. So I don't mind holding this where we currently are at. Right side of the channel looks nice. If we come back down into this green zone, which is around 4250, I would expect there to be a decent bounce to the upside. So I'll continue to hold Euro CAD long a little bit longer. Speaking of long, Euro Swiss looking better. We are creeping back up towards previous highs at 110.50. Come on, 111. Come on, 111.50. If we get up there, I'm going to be taking some profits. So chart alarms are set, 111, 111.50, trying to grab some pips out of a nice built-up position down here. Euro Swiss has been built up from inside the channel to the right side of the channel. Now looking to take some profit at 111.50. What's next? Euro JPY? No, Euro Pound. Euro Pound. All this excitement and then more of a snooze fest over the last, 1, 2, 3, 4, 5, 6, 7, 8, 9 days. That's a lot of indecision after so much excitement through August, September, and October. Now, something to watch. Keep a close eye on the pound pairs. My recommendation for my own trading is to either stay out or trade short-term only. Watching the currency strength chart may be your best friend. It might be your worst enemy. It might be very difficult because unless something happens right at the UK Open, right around 3 a.m., 4 a.m. Eastern time. By the way, with this week's trading, because we had daylight savings in Europe last week, technically in the US it is 4 a.m. and that is 8 a.m. UK time. So the London Open is at 4 a.m. US time. Next week, after the US falls back on Sunday, it will revert back to that 3 a.m. So it'll be 8 a.m. UK, 3 a.m. US Eastern time. So just so there's a time shift, you can see that right there is a jump at 4 a.m. That's the Open. Again, if that's all we're really getting, everything else is kind of random. So, I mean, I am looking to trade right around that UK Open. That's probably the best time to get some decent movement. But if it is like one and done, movement for 5, 10, 15 minutes, and then it's over, man, it makes it so tough to trade. And if you look at this from the daily chart, I mean, we're at 9 indecision days. So what I'm kind of wanting to see is some structure within the indecision that we can trade. If we're looking at something like this, I mean, keep an eye on this structure, and we should be looking for something more definitive, either a break higher or a break lower. And if we have that setting up and we have a nice clean break above or below, then of course we can participate. From the technical standpoint, there is a little bit more room to the downside. There are some factors to consider. If this is pausing here, we do have some inefficiencies, certainly from the last couple of weeks. We could come down here and score a point, and then from there, that could be support to bounce back up and fill this area around 88.50 or so. I'm not sure what the real driving factor is going to be. If the extension until January is good for the pound, bad for the pound, it's hard to tell. It really is, because we've had good news and bad news create good and bad movement in the pound pairs. I think the real trick is just to watch price and stay alert and trade short term and try not to over leverage and over margin and try to be positioned accordingly. Or stay out and don't worry about this stuff and go trade the other 20-some currency pairs that you can. So that choice, of course, is yours. But from the technical side, there's room either way. But 9 days of indecision doesn't look to be changing anytime soon. Plus, we've got snap elections and votes and things popping up on the calendar and more headlines coming out of the UK. So it can be tricky. It can be very random. It can feel like it's impossible to really catch in time. So again, pick. to trade or not to trade. That is the question. All right, moving on. Euro yen. Euro yen. We should be heading higher. I was hoping to see, just like we talked about last week in the weekly outlook, I was wanting to see this stochastic come down towards the lows that we can start buying. This may still be the case over the next couple of days, and we have a big Wednesday. Remember, FOMC on Wednesday afternoon, rolling into Wednesday, Thursday trading. That's a Bank of Japan. That is a 48-hour period where we could see, both banks cooperating, and that ends up yielding higher movement in the stock market, higher movement in the currency pairs like this, where the euro yen would ultimately go higher. There's a 1/618 extension up there towards 122.55. So I'm looking for some additional bullishness on the euro yen. Euro New Zealand. This one is still range bound for right now. We do have some pending orders here. We're going to sell at 75.05, and again back here at 76. What's my high there? 76.65. The structure I'm watching is right up here. Just watching these connected highs. Watching the connected highs, trying to look at this high to low, a medium level entry, and then again at the high. So if this heads lower, I do want to keep a close eye on this. If the structure is really, really choppy to the downside, if we do make some new lows, but it's really choppy, then I'll probably take some profit, because ultimately that price action would tell me that this means that there's only going to be so much movement to the downside before we get something bigger coming up. So I'm not sure, but again, off of the patterns I'm seeing on Euro New Zealand, which is a weekly bearish pattern, New Zealand Swiss looking bullish, New Zealand yen, New Zealand dollar, Aussie New Zealand, all favoring New Zealand dollar strength. I think this should be heading lower. And again, this big green box is where I'm looking to sell high and take some profit around 1.70. Euro dollar. A little bit of a reset last week. We had this great trade from 1.1070. We wanted it to break above 1.1030. A lot of traders got long right there, took it all the way up as high as they could. It yielded about 100 pips of movement, so nice little scalp there. I was expecting it to go to 112. It didn't get there. So I'm wondering if this week, if this is a break, a pullback, are we going to pull back into some levels where this forms a high or low and we actually make a move to 1200? That is what I'd like to see that based on a rate cut from the Fed and a possible, well, we'll see what Friday gives us. But if we have a rate cut from the Fed, we should see some dollar weakness. So don't be surprised if we hit 112 this week on the euro dollar. And then that begs the question, of course, is 112 resistance to sell, or is 112 the breaking point to really create a relief rally on the euro that's been in a channel for over a year? Because from a technical side, we are looking for this move to come back up to 116 or 117. So could this be the time to start rallying this move to the upside towards 112, breaking that threshold at 112 plus, and then heading up to 116? Time will tell. We need a lot of confirmation to get that going. But for starters, I think that we can look for a higher low and a push towards 112 this week on the euro dollar. So I'll be watching that in the room. We have bonus sessions on Wednesday and Friday for my trading room. I'll be looking at FOMC to trade live, as well as non-farm on Friday to trade live. Pound pairs, I'm going to kind of skim through the pound pairs because you know the deal. They have been snoozing 1, 2, 3, 4, 5, 6, 7, 8, 9 days of indecision. I would favor pound Aussie as a sell opportunity. Okay, technically I'd favor selling it. Sell it off of 9,000, sell it off of this double top, see if we have some indecision there to push lower. I think position-wise, I would be more willing to put a high in place and come back to the inefficiencies that were created over the last couple of weeks. But 9 days of indecision has to change. If we have some structure, keep an eye on this. If we sell it high with a rejection candle, that's a great spot to look for rejection. Otherwise, if it's sideways, and we break lower, you can certainly take advantage of that as well and just trade the breakout. So I'm looking in favoring some technical pound weakness. Pound CAD, similar. Okay, pound CAD's had a little bit more movement to the downside. Look and see if we can come back up to revisit 7,000. If we can come back up to revisit 7,000 and fail, look to sell high, come back into some of these levels from that giant eruption I guess it was 2 weeks ago now, where we had just like 4 or 5 days of crazy pound movement. So I'm looking for, sell high opportunities, keep the stop loss nice and tight, and look for, maybe 6,400 as a profit level. Pound Swiss, similar to the euro pound. There's room either way, but look at all the indecision here. Can we sell the highs around 28.80, and can it come back into these levels around 2,200? It seems like a lot of volatility. This is the high that all started back in April and May. If it holds here, look for this indecision, see if we get that snap back down. If it continues higher, well, there is room for a breakout. Now, that's what I'm saying. I mean, keep an eye on the technical. Take the trades for what they are. If we have indecision, I would favor a breakout and go in that direction. And again, short term is probably my primary focus on pound crosses. Pound yen, we should see yen weakness. With the pound added to it, this one might be tricky to trade, but I expect some bullishness to be resuming now and possibly continue through the end of the week. Pound New Zealand, I would like to sell high around 2.0450 or 2.0500. This looks like a good one to have a very aggressive move up here, resistance, come back up here and fail at the high, and then look for an opportunity to short that 2.0450, 2.0500. Don't scale into this trade. If this is me, I'm not scaling into this trade. This is either a trade that you give it like 1 day. If it goes with a rejection and goes your way, excellent. If it goes 1 day that you're filled and 1 day bullish, I would close it. I mean, I just don't want to see this go up to 210 and all of a sudden we're like, well, it's a great spot to sell it. Yeah, it is. But what if the pound rally continues? Okay, so be careful on some of these levels and certainly have an exit plan in mind if it doesn't cooperate. Pound dollar, 1.30 is resistance. Right there, we've hit it. Now, could we come back and hit it again and stall? Could this be run, minor pullback, hit 3,000 and more indecision? Could this be more of a correction? Could this be blowing through 3,000 and heading up towards previous highs at 32 and 33? We don't know. Give it some time, give it some structure. So watch this area, If we keep rejecting off of 3,000, we can sell it. We have inefficiencies down here when we started this rally in middle of October. So it's a sell high with a tight stop area. If it blows through that, then you can scalp it and grab it and try to go long with it and run it up as high as it can, possibly 33 to 3,400. So 3,000 is a nice psychological line in the sand for the pound dollar. If it breaks above it, my outlook is always bullish. If it breaks below it or rejects off of it, that's a resistance point to sell. But it does make sense that all of this structure here could be setting up a larger correction into 3,200. come back up and retest this area back from, March and April of this year before the pound really started to tank. All right, New Zealand pairs. New Zealand pairs, I'm looking for some strength, but the New Zealand was beat down a little bit. Now, there's tons of divergence here, which I like. Lows, lows, lows. There's disagreement on all of these. Now, if we see a fresh low in price, disagreement, that's a good sign for this to, even if it's choppy, we're looking to carve out some lows on this New Zealand CAD, at least go back to 86. At least go back to 86. Anything up towards 88 or 9,000, I am definitely protecting my profits. I've just built a little position in here. I'm looking to add to that position. Once we get a break, save profit at 8,600, try to trail some stops towards the 9,000 handle. But I'm looking for this to carve out some lows on New Zealand CAD. New Zealand Swiss, similar. Carve out some lows. What are we doing here? Can we take out this high? Can we carve out these lows? I hope we can just get above this yellow box and go higher. I'm looking for 6,600 to 6,650 for some profit on the New Zealand Swiss. New Zealand Yen. New Zealand Yen had a little pullback last week, but looking to see if the stochastic lines up for another U-turn. Again, focus on the Japanese yen. I will be watching the strength meter this week to see if we get the, this is the light blue line here, Japanese yen, Swiss franc. If we see the dollar, the yen, the Swiss on the weaker side, then risk appetite should be plentiful. I would think that we have this low to high, carve out, a little bit of a double bottom there, pushing again towards a new high, carve out another low, hopefully a higher low, and then a push again towards, there's a nice price gap around, actually it's way up here, 73.50. I've mentioned that now for quite a while. Even this inefficiency level around 70.50 or 7,100, I think we can get there as well. So I'm still looking at a bullish outlook on New Zealand yen, New Zealand dollar. Similar to the Aussie dollar, we're on the right side of this trend line. Is this a head and shoulders pattern? Left shoulder, head to neckline. Are we setting up the right shoulder? Possibly right shoulder, looking for a break of that neckline to go up. 6720, 6750, 6800, all these levels to the upside. I've got a big pocket at 6890. I'd love to see it get all the way up there. A reversal pattern is the way to see it happen. Now, if we see a reversal pattern and price starts to cooperate, I will probably add orders to the upside and get pretty aggressive on an add from a symmetrical point. This low to high swing, I will look at this low to high follow through, and that would be a level that I can get pretty aggressive on add-ons, and then from there, I'll try to let my profits continue to run towards 6,700 to 6,800. If it gets all the way up to 6,890, that is awesome, but I'll be very happy with a run into like 67, 6,800. So I'm looking for that reversal pattern to hold. If it does somehow disappoint, comes back to the lows, I'm still looking at disagreement, divergence, and still going up. So I'm really not that deterred from this movement. I think it's every time I've seen major bottoms on the New Zealand dollar, it has been a reversal pattern. So this looks pretty promising for right now. Looking for a right shoulder to set up this week. And with the Fed rate decision and non-farm, if this just starts to go, what great timing to have this set up with a major news movement, and then we head into November. I mean, literally you're talking about 1 or 2 weeks of trading in November, and the rest is kind of holiday driven. And holiday movement tends to create trends. So if we can start these trends now, I think we can sustain these trends through the holidays. So let's see what develops here, but I'm looking for that reversal pattern to go up on the New Zealand dollar. Dollar CAD. I bought the dollar CAD last week at 3055. I have another pending buy at 3009. That is playing the support at 1.30. Now, we do have news, of course, this week. Okay, we've had a pretty big drift to the downside. 3,000 is an important number. I am looking for a bar count on my right trader chart. This is a 1 hour. The bar count is stretched pretty far. Let's take a look at this right now. So this is my right trader strategy. We have the shaded zone that is 287 bars. We have the red ribbon, 287 bars. It's getting up there. For a 1 hour chart, it's pretty uncharacteristic to go much further than 200 to 300 bars. So if we start hitting, let's say we hit this 3,000 zone. Well, I'll have trade 1 in, trade 2 in. I'm looking for the news at least to pop this up towards this red ribbon or this shaded zone. If that's the case, I might just grab some very quick profit and get out of this trade with a net maybe 40, 50 pips. If we see dollar, well, actually, if we see CAD weakness, which is kind of what I'm looking for across the board, if we see CAD Swiss dropping, Euro CAD rallying, dollar CAD rallying, then this probably becomes a correction trade back into this area, certainly back into this area around 32.50. So I'm looking at kind of the nearest level to get some profit, but it might be wise of me if I get a good entry here and it starts going my way, move it to maybe plus 10 or plus 15 and just see if I can get lucky on price continuing higher. That's hard to get sometimes, especially if it's not the best entry, but if it heads up here and pauses and just keeps going, well, maybe a plus 10 gets me in this trade and lets me run with this profit a little bit further. But either way, I'm looking for at least a short-term move to the upside on dollar CAD this week. Keep in mind that on the 1.30 level, if we break below 1.30, here's a weekly chart. If we break below 1.30, this should spell more downside. You know, from this final 1, 2, 3, 4, if this is going to break through 1.30, this could be a fifth wave move that brings it down towards 128 or 126. So even if it's going to be a channel like so, something like that should push lower. But 3,000 for right now is a support level that I'm buying from. If it doesn't work, then I'll close. But if it does work, I'm at least looking for profit towards that right trader 1 hour chart. Dollar Swiss, hopefully there's more downside coming soon. We are pulling back towards resistance around 1.00. We'll keep an eye on this one. I really don't intend to sell this. Well, just watch this. If you want to sell this one, look for a trendline break in here. Just a clean trendline break on dollar Swiss and follow along. But I think the better trade and probably the faster trade with more volatility is if the dollar gets weaker and dollar Swiss drops, expect the euro dollar to rally. And that's why I think euro dollar can hit 1.12 or higher this week. All right, so we've done the dollar index, we've done oil, we did gold, we did silver, we did Bitcoin, we did the SPY. Has the market come back and filled the SPY yet? Let's check on the 1 hour chart. Have we filled the gap today? Not yet, but we're trying. So again, could this fill the gap and stay bullish? Of course, it can come back in, fill the gap for the morning, and then have the afternoon still hold the highs. There's a lot of news that I would think support bullishness this week. Optimism out of U.S. and China, a delay in Brexit, central bank support with the Fed cutting rates this week, earnings if it's another positive boost in earnings. All these things are pointing towards more bullishness. Whether or not it's a big rally and it's a huge participated rally, that remains to be seen. I don't think it's going to be much participation. I think, you know, I'm going to say most of the big money is either in cash or in protection. But that doesn't mean there's, you know, it doesn't mean that there's anything to derail this and you know, cause this to actually drop and break all the structure. So I think it's still bullish for right now. I think the path of least resistance in stocks is bullish for now. But keep an eye on the bigger time frame, of course, because this structure is very ominous and eventually will be probably a 20, 30, 40% correction that nobody's going to be ready for, even though we've been talking about it for the last year. So we've got to be ready for it. But like I said, stay with the trend. Stay with the fundamentals. Stay with the catalysts. Right now, everything's pointing towards more bullishness. And that's it. So this week, I'd like to see Japanese yen weakness. I'd like to see some risk appetite in pairs like the Aussie and New Zealand. I'd love, capital LOVE. I'd love to see dollar weakness and have that dollar index follow through. Another one to watch for is the DXY. DXY on the daily, DXY on the weekly chart. Can we finally break below this 200 exponential moving average? We haven't done this in, again, over a year. This is September of last year. All these lows, all supported by the 200 EMA. So we've come down to touch it. Is this a high, low, correction? Can we finally get a push? If we get a push lower, yearly pivot is on tap, and that is a long ways down. That is where we make a lot of money on dollar weakness. So that would be Aussie dollar, New Zealand dollar, euro dollar, pound dollar, dollar CAD, dollar Swiss. Dollar yen will probably be neutral because a weaker dollar and weaker yen are likely going to coincide because we'll have a market rally because of that. If the market rallies, stock markets rally, dollar tends to stay weak. All right, if the Fed continues to cut rates, if they cut for a third time this year, we're probably going to lean towards another cut in December. And that goes from, I mean, that would be 4 cuts. That brings us back, well, it essentially wipes away all the raises from last year. And then it's more central bank rhetoric going into 2020 with a massive U.S. presidential election ahead. So trade and trade accordingly. All right, traders, happy weekly outlook. Happy Halloween. Hopefully it's not trick in the market this week. Let's get some trades. Let's get some treats. Make some profits. If you want to find me out there, Instagram, Facebook, Twitter, YouTube, send me a message if you wish. Like, subscribe, get the notifications for these videos. Have a fantastic week. I'll see you all in class. I'll see you all in the trading room. And happy trading, everybody. Bye.